Hello and welcome to today's live trading hour brought to you by the Live Trade Room. Hope you're keeping well. So what we're going to be doing during this session is we go through the process in which we engage with these financial markets. So we'll do a little bit of a fundamental analysis. We'll assess the sentiment in these markets, and then we'll present our trade plan, which we've been working off for the day. We every evening at 9 o'clock we do host our live trade plan webinar, which allows us to be prepared for today's market conditions. If the markets then move in the direction in which we've prepared, then we'll be looking to engage with those trades. And there's a couple of good opportunities today. So without further ado, let's get straight into it. If we could start firstly with a risk warning, please take a brief moment to familiarise yourself with the risks involved, of course, in trading these financial markets. Without the assumption of risk, there is no potential for opportunity, but it is an important it's an important part of trading these financial markets. Your ability as a trader to be able to
expect comments from the Chicago Fed President Charles.
Sorry, I'll turn that off for a second. I'll go back to we've got some news coming up in just a few minutes now, so I'll come on to that in just a second. So hopefully you've had a brief moment to familiarise yourself with a risk warning. So let's then start with a review of market moving news. The reason why we want to be mindful of any news events that are about to occur is so that we don't get in the way of any major news event and be caught up in really volatile wild swings. So, for example, you don't want to get involved in the euro dollar just 10 minutes before an ECB announcement, for example. So, just looking at today's news events. Yesterday we had a number of bank holidays, as you can see. Today now we don't really have a huge amount to deal with. We do have a lot of central bankers at the moment talking about the inflation story and the, I suppose, as far as the US is concerned. There seems to be a lot of pressure for the Fed to taper and to ultimately bring forward their timetabling for increasing rates, but they're very resilient in their stance. They're looking to take the slower path. They don't believe the more recent uptick in inflation is much of a concern. There's still issues on the employment side of things. So it's very much trying to ease market conditions. As a result, it's probably not a bad time to just bring in the 10-year Treasury yield. We just look at this as a little bit of a snapshot. And you can see that the yield is just coming off last week's highs and actually a bit more pressure to the pressure seems to be easing, let's say, for the equity markets. So that's why we just monitor the 10-year just to give us a bit of a snapshot in terms of how the bond market's reacting. So we do look at this multi-asset class view of these markets as well. So we've got one of the FOMC members, Evans, from it's the Federal Reserve Bank of Chicago president. But I do believe there's a number of other central bankers as well, and they're due to speak about the economy at an online event hosted by the Bank of Japan. So the Fed and FOMC members seem to be consistent in their rhetoric, and that's quite supportive of these stock markets. The only other major news event for the day is the consumer confidence figure. So obviously, if a consumer is confident, they're more likely to spend the money that they have. If they're concerned, fearful, or anxious about the economic look, they're more likely to hold on to it, and that's the basic principle. So a nice strong figure, anywhere in and around 119 would be regarded as a very strong figure. The more confident the US consumer is, again, the more money they're likely to spend. So that's the correlation, really. So be mindful of that at 3 p.m. So let's see what opportunities we have for you today then. So that's basic sort of overview of the fundamentals. The the macro events are really very much geared around the vaccine rollout, the reopening of economies, and there's even with vaccinated large percentages of vaccinations, there's still high numbers of cases, and that does sort of cause a concern, especially when you're talking about opening up your retail and travel sectors. So no doubt there's going to be stumbling blocks along the way, but broadly speaking, we're in a good place as far as dealing with this virus and looking to reopen economies. So in last night's live trade plan, it was very much geared around the equity markets to the upside, largely above yesterday's high. So we're currently at that price as things currently stand, and also the euro dollar just above yesterday's high at the 22.29. The Swiss franc just below the 89.54, and crude oil, actually looking at the crude oil to the upside. It's just we've just poked its head above that $66 level and has now just kind of rolled over to the downside. So broadly speaking, we're looking for the equity markets to continue their very favorable move to the upside. We'll see if we do get consistent follow through, but we're at that sort of decision making point now for the S&P. We're quite close to it as far as the Nasdaq. So all of these have moved in that direction, as you can see. The Dow Jones is just pulling back to those levels. So this is where it gets a little bit more messy. When we look at the FTSE market, it just seems to be one day up, one day down, and a lot of volatility and a few price reversals as well in for good measure. Again, with the DAX, yesterday we closed above it, and really the decision became, would we get a decent move above that high? And the answer is no. So we can discount some of these in terms of high probability trades, and we're at these decision making points as well for the Nikkei. Bitcoin, we are seeing this market put a little bit more pressure onto the downside. People ask us, do we look at this market and think this is a good time to buy? Absolutely not. I'll just share with you on the weekly time frame, for example. So what we can see with this market is we had been all the way to the upside, and if you asked us in this period from here to here, would we anticipate this market to continue moving higher? The answer would be yes, until we got this quite strong reversal signal. The market made a low, so you get the inevitable pullback. There's nothing wrong with that, but then you really want to see this market continue to make that new high, and it failed to do so. So we never saw that new high above that $65,000 level. So then what we saw, technically speaking, this is, and I know it's a lot to do with Elon Musk and a few other sort of big names, and the cost of mining these bitcoins is pretty heavy, and so we saw a structural failure to the downside. So what we look at is this market has sort of moved from 65,000 down to 30,000, and we're getting a little dead cat bounce. But right now, and we might get that bounce a little bit higher perhaps, but the pressure's really on further to the downside for the time being, and that's the difficulty with Bitcoin. It doesn't necessarily work with the technicals to any great extent. It's very much sentiment based driven and purely supply and demand, and if there's enough buyers at a certain price, prices push higher. If there's enough sellers at a certain price, the prices will push lower. So very difficult market to certainly trade, but we would look at this on a daily time frame and suggest, well, this market is still squeezing lower, so we're not really getting that corrective figure. What that would look like if the market pushed higher to the upside and then it failed to make a new low, and then it kicked on to the upside, then that's your game changer to the upside. So just a little bit more patience is really required with this market, because we don't know how low this market will go before we get this structural failure bounce to the upside, and we don't know what price that will be at. So that's the interesting thing to Bitcoin. And Bitcoin for us is more of a buy and hold type investment, rather than an opportunity to be jumping in and out daily. It's a very, very turbulent market, and as we've seen for the last couple of weeks, a lot of people have lost a lot of money on something that's just so speculative. They're trying to recover those losses, but it's a difficult uphill struggle. And from what I understand, the psychology of those that trade Bitcoin, they're all over the place. They're excited, they're exuberant, they're fearful, they suffer a lot of pain, and it's just that roller coaster up and down ride. And that's not really for us. That's not really what we want to sort of get ourselves involved in. Although the upsides are tremendous and the downsides are also pretty huge. So it's that trade-off between risk and reward, isn't it? So we like the euro dollar to the upside. There's a few of these markets actually that would give us slightly better opportunities. So we'll have a quick flick through. We'll discuss some of the opportunities from last night's Trade Plan Live webinar, which was the euro dollar above that 122.29 level, and we're nicely above that. It looks like we're just pulling back to a bit of support, so we come back to the euro dollar. This market, like a few of these markets, are in this little zone of consolidation and erratic price action. So we've got clear markets elsewhere. Basically, another example was just in here with the dollar yen. So again, we want to see breakout of these markets, and they're just drifting sideways. Now a market that's broken out to the downside. This is why the euro dollar to the upside and the dollar Swiss to the downside are sort of slightly better opportunities. We've been in this little sideways range even over the last 7 days. You can see that little range just sitting in there, and now we are just about breaking out to the downside. So that's more of a green light for us to get involved in a trade like this. So we'll come back to that. So the euro dollar to the upside, the dollar Swiss to the downside. We can also look at the CAD, the dollar CAD to the downside. Very little volatility today, but we would expect a little bit more. We've got a Mariposa close as well from yesterday's candlestick. So we don't really want to split hairs when we trade, but there is your sideways moving market, and we're at the very, very bottom of a market like this. So, but we are still technically in consolidation. So we might get this opportunity a little bit later on. We'll keep an eye on it, but we'll work with the dollar, the euro dollar, the dollar Swiss, and we can either choose the Aussie dollar above that 77.57 level. Or it's a slightly similar situation for the New Zealand. We can't get away from the fact that unfortunately we are sort of trading consolidated markets, and we're in a similar situation for the New Zealand dollar. So again, we do like these markets to the upside, but there's your consolidation. That's why the opportunities don't really fully stack up for us just yet, but we are edging closer to being able to get involved in these opportunities, and these have been going on now for a month. So the good news about consolidation is that We really like breakout of consolidations. That's one of our bigger moves. The New Zealand dollar, the euro pound, it's beginning to make this move. So what we're seeing is a strong euro continuing from yesterday. Even though we saw this time yesterday, we were talking about an opportunity to buy, but it looked very much like the volatility was coming out of the trade, and prices start to roll over. So it'll be interesting to see if the same thing happens again today with the euro pound. We do like it to the upside. Again, don't want to sort of drive home the point too much, but we are trading consolidated markets, and that's the important point to take on board with some of these markets right now. And there's a lot of traders that will scalp these little moves and look to get in and out, which is absolutely fine. There's loads of ways in which you can trade these financial markets. A lot of our traders have a variety of different styles. They often use our trade signals for trade selection, direction, and roughly speaking the price at which they're looking to enter these markets. Did I turn that off? I think I did. Yeah, I turned off our squawk there, but we'll get an update on the FOMC. Remember, I think a handout was prepared, I think, for the speech, so the markets will get a little bit of an update on it, so we'll hear from that shortly. So the euro pound, very much to the upside. It's a viable trade to the upside. So's the euro yen. So we're looking for that euro continuation trade. So the yen is one of the weaker markets in today's currency pairs. Just very quickly on the commodities, we have gold just hanging around in this really tight range over the last 5. You could even include the 6th trading day. So that's not fantastic. That's a very small range. So the volatility's really come out of this market. So you can see the last 4 trading days has been range bound between 1889 and 1862. So we're talking about sort of a 25-point range in the last 4 trading days, which is nothing. So crude oil, we had expectations for this market to continue to the upside. What you can see from here is a number of levels of resistance just up at these highs, and so there's a number of levels of resistance up here. We are just marginally above the monthly high, and maybe we can see a turnaround trading opportunity. So we've got the pullback. We've got these levels just sitting in here. So one to watch crude oil. I guess the opportunity, the higher probability trade would be a sort of a breakout above 66.26 with a stop loss below the 65.42. So you're talking about an 80 pip stop loss on a trade like this, and you'd need that level of you'd need that distance really in a trade like this. So we are still quite range bound. And again, what we can do is we can sort of put a little bit of a box around this price action, and yes, short-term upside, but the higher probability aspect of this trade is the 66.26 level. Each push higher in this market, might end up rolling over. A breakout to the upside, there's your resistance, there's your levels of support. So a breakout to the downside would give you a decent trade lower. and a break above resistance gives you a decent trade to the upside. So we'll keep an eye on crude oil, but not a great opportunity. So the S&P to the upside, we will have a decent look at. So let's put together our trade plan then. So we'll come back to the S&P 500. Definitely want to have a look at. So put the dollar pairs. The dollar Swiss, sorry, is the other one that I wanted. Right, we put the euro pairs just down the bottom. So we're seeing a nice little uptick in European strength in these markets. So I wanted the I think the Aussie above the New Zealand. I think we've got that S&P market to the upside. So we're just approaching the US Open, when we're likely to see some US capital come into these markets. So it's the euro pairs and the dollar pairs. So dollar weakness. So the S&P to the upside, dollar weakness, and some European strength is pretty much our focus for the session. So we'll put these levels in, and we'll see where the opportunities lie. So when we do our analysis on the daily time frame, we then go down into the smaller time frames and we look to prepare the trade. And as you can see, you get a slightly different snapshot when you do that.
Vaccine news: the Moderna COVID vaccine said to be highly effective for adolescents in a study.
Okay, that's good. There's some really good updates on the vaccine rollout.
The study meets its primary endpoint. They plan to submit the data to regulators in early June.
Okay, so you've either got a pullback at the 22.29 level, so if prices come back to there.
Bank does leave the benchmark rate unchanged at spot 6% as expected.
Or you can capitalize on a bit of a breakout trade of this level in here with a cleanly defined stop loss.
From Brazil, the IBGE inflation month-on-month spot 4.4% versus spot 5.5% expected. Year-on-year 7.27%.
So let's mark that level. We'll just put a little line up here. So we're looking for a breakout above the 22.61, and we just bring the stop loss down to 22.41. So we're only talking about a 20 odd pip stop loss in this trade. So we'll relabel this. So this is a So breakout buy trade above 122.61. 22.61. And we'll just turn it green just so that it's a buying trade, buying opportunity. So that's our trade plan for that's exactly what we're looking to see happen for the euro dollar trade. We'll stick with the dollar trades just for now, and then we'll come on to the euro trades. So similar situation, we're looking for, we always look to go in the direction in which the market is moving. So we're not looking to buy the lows. We're not looking to scalp off the bottom of these trades. We're looking to go with the momentum of the market. We're momentum direction based traders. So we kind of categorize what type of trades we look for, and then we just try to get really good at identifying those opportunities. Oops, excuse me. So we're just pulling back to those important levels. So let's look at it something like a 15-minute time frame. So here is your sell trade opportunity. So we'll just label this, and we might be able to get into this now in just a second. Like I said, this is not a breakout trade, this is a pullback trade. So pullback sell trade, and it's actually around this high in here, the 89.52. 89.52. So what we have is this little, this is a 15-minute time frame, don't forget. So each one of these has a value of 15 minutes. And we've got a lot of consolidation around these levels. So if prices just break below that 89.45, then there is your trigger to get involved. Let's have a quick look at the Aussie dollar. So again, we want to go with the more recent momentum to the upside, which is a buying opportunities, a buying opportunity for the Aussie dollar. Market bounced back to previous levels of resistance, which then becomes support, and now we're seeing prices tick higher. So actually it's the structural failure trade to the upside, or the breakout trade. In fact, we've got quite a lot of resistance up at these highs. So there's your consolidation really over the last going back to the 19th of May, so going back to last week. We just got a little bit of up and down. So again, the opportunity is kind of the breakout trade above this level, because this is your resistance and this is your support. So buying opportunities.
No comments as of yet from the Richmond Fed President Thomas Barkin. As we said as well, Fed's Evans now being slated for 2:40 London time with a text.
Okay, so with these support and resistance levels, it provides resistance for a reason. Prices bounce off it until we get that breakthrough trade, and then the psychology shifts quite dramatically. So we can have a look at this level just in here, the 77.83 to be precise. 77.83. We'll just amend this. 77.83. So we're just watching the breakout trade above that 22.61 for the euro dollar. The same level to the downside as the 89.45 level. So we might be close to getting into this trade here, the euro dollar. And the Aussie dollar needs a little bit more work to the upside. Let's have a look at it on a bigger time frame.
Fed's Barking says he's hopeful they're on the brink of completing the recovery.
Okay, so we've got a buying opportunity here now. So we can get our account ready to just get into those trades. So really what we're looking at this stage is we've potentially got a green light above that 22.61. So what we want to see now is the close above that level. And if the market performs as to our expectations, then we'll get in. So it's the close and then the follow through. And then that gives us that ticks the boxes. So when we trade, we look at overall momentum. We've got positive correlated markets, i.e. the stock market's pushing higher. We've got consolidation, clearly identifiable consolidation, so we're looking at a breakout above that consolidation, and then we want to see the close above on whatever time frame you happen to be trading, and then we want to see the follow through. And if we get all of that stacking up, then it leaves you with hopefully a more confident trading decision to be able to buy this market at that particular price. So that's really the formula of trading these financial markets. And traders use all sorts of reasons like RSI indicators, Fibonacci retracement, and all they're doing is really confirming the opportunity and the directional bias of that opportunity. So we can do that with our understanding of how these markets move. We're going from bottom left to top right, and now we're getting a breakout of that level at the top. So we don't need 4 or 5 indicators to tell us this information. We can read the chart, which is what we kind of pride ourselves on. So we are close to just getting our trading account ready. We'll start pulling the trigger on that one. So that market will close now on a 5-minute time frame. You want it to close above it, the 22.61, and then if prices accelerate higher, then that is great news. So it's just really a checklist for us when we trade. So
More from the Fed's Barking says challenges in workforce supply likely to last into the summer.
Okay, so what we can see on screen then is we're getting the close above. So now prices just tick a little bit above that, and we're in. With a stop loss at 122.37. And all we're really doing is we're challenging this market to break above a level that it's been resisted on a number of occasions. So then a lot of these sellers start panicking when prices break above these levels. and you're likely to find stop losses are placed up here as well. So that can add a little bit more volatility to the upside when you trade. So let's get into this trade then. Right, there we go. We're getting into that trade. Two, 7. So there's our entry price. Just accounting for the spread, just a couple of pips above the entry. And there's a stop loss as well. So we never really enter at the price, and we never place a stop loss exactly at the price. It's always 2 times the spread above or below the level, because for us to get taken out of this trade, we don't just want prices just brushing off the 122.41. We actually want to break. We want this market to break through it, clearly break through it. Otherwise,
the Fed's Barkin says market-based inflation expectations have not escalated beyond their targets. Says survey-based expectations are stable as well. Just repeat another comment there from the Fed's Barkin. Market-based inflation expectations have not escalated beyond targets, and the survey-based expectations are stable as well. Says they're watching very closely if we will see sustained upward pressure on wages.
okay, so they're not really seeing the inflation formally that everyone seems to be experiencing, but I suppose they've got their ways of working all that out. So the euro dollar.
And Barkin says the issue right now is no longer the demand side, it's the supply side.
So the dollar Swiss is just trading inside this zone. So we might be able to get a couple of euro trades off. See, this market is just grinding higher. It's been grinding higher all session, or European session. So really, you want a corrective phase. You want. I mean, ideally, you kind of want this market to just pull back to previous resistance and look to capitalize on a bit of a pullback, but it's just accelerating. Ironically, after this market had just initially broken lower, and then it starts to reverse. So it's continuing to move higher. It's just the opportunity is really sort of rubbish. So let's have a quick look at the euro yen. It looks like the euro. So this is slightly giving us it's marginal, isn't it? But it's a slightly better opportunity. So there's your entry above yesterday's high, the 133.100 level. Now we're up a little bit higher than that. But we have cleared these levels, and we are firmly within this little range, just sitting in here. So can you see the difference between a floor being or a ceiling being created and looking to buy above that ceiling versus the euro pound, which is just accelerating? And we always like to be quite patient with moves like this, and we slightly have slightly better. See, we still have issues regarding a stop loss. That's the reality of it. So let's see if we get that close above this level, and then we'll have a stop loss. It's going to be quite tight though. That's the only problem. So if you define your risk and you just, you know, for us it'll be a 1% trade. We wouldn't want to take any more risk on that with a pretty tight stop loss. You know, we'd like to have bigger stop losses really with these markets, because of the nature of the volatility and the swings that you can get involved in can be quite significant. So this market is just ticking, it's just continuing to just push higher. $133.48 now. 133.48. In terms of classifying the opportunity, it's a breakout trade above that very important level, 133. Well, it's the 133.50 level really. The last one are the indices markets. It's always worth seeing how these markets react to central bankers. So the Nasdaq ticking a bit higher. The Dow Jones is at that decision-making point. The DAX and the FTSE are looking marginally negative. So there's not much volume really in the trade. It doesn't look like that anyway. Look at the price that we have the monthly high here at the 42.20, and this price is just rolling over. Just going to check that monthly high. Yeah, so it's just sitting in there, and you know, a real sort of turnaround month actually. It was looking quite negative for the stock markets off the back of that inflation story, and a lot of that has recovered with incredible resilience, let's say, because at these points it was looking very, very, very bearish at one point, and as this market always does, it's phenomenally resilient, and there's a lot of traders that just can't understand how prices are at these levels, but they are what they are, and we've got to trade the opportunities as they arise. But you know, do be mindful of the fact, if you excuse me, sorry, we do need to shoot over to our other trade room now in just a moment. So you know, do be mindful of the fact that the majority of the trading over the last month has been largely sideways, with a couple of...
We're 10 minutes away from the bottom of the hour. We are expecting the release of the Philadelphia Fed non-manufacturing survey. It doesn't usually get too much airplay compared to the manufacturing reports. Philly Fed non-manufacturing for the month of May, prior read of 21.5. More from Barkin. There's still a lot of room to grow in the labour market, and it will take into the summer to unclog it.
Okay, so maybe we see the inflation story come back a little bit later in the year. So we can see prices have been largely drifting sideways, with a couple of exceptional blowouts to the downside and a little graze to the upside as well, just to make a new high and then reversed. So that's really what's going on with these equity markets at the moment. Yeah, hello Chris. Could you look at the euro pound on the 1 hour? Yeah, we were just talking about it just a moment ago. I don't know if you were here for it. It's just been on a bit of a tear to the upside, hasn't it? So I'm not sure what price you got in. The better price was, you know, in the early hours of the morning, just pre-European Open. 86.28, so that's your pullback, and that was your... I mean, it's a bit messy because it did flush through to the downside, attempted to make new lows and then reversed, and we're just kicking on to the upside, as you can see. So it is a continuation move of yesterday's pretty poor price action, really. But like, it's really even hard to if I could do a diagonal box, then that would be great. But we're just now sort of breaking free of these rejection trades which we've seen. So it'll be interesting to see where price goes from here, because if we get continuation tomorrow, then we're really on to the upside. So I think you mentioned the hour, so you just got a slightly bigger time frame. Yeah, so I mean, what we can even on the hour time frame, what we can see is oops. So we got this situation where we got kind of lower highs on the way up, and higher highs as well. So this is now a new higher high. So, you know, to suggest you're looking for a buy trade is absolutely the right type of trade. I don't know what price you got in at, Chris. What you just need to put up with really is the sort of the long pullbacks. That's what this market is sort of suggesting, and up at these highs you're going to get another one. As long as I mean, this is a good decent stop loss now, because prices have kicked on, and you want to be very unlucky if prices just tanked. This is the safer level, but that's a technical level as well. Below the daily high. Okay, so you got in at the 54.50 level. The 54.50. Do you mean the 86.50? Yeah, I'm looking at the euro pound. Yeah, it does look a bit overextended. I suppose that is ultimately the reason why we want to wait for a pullback. It's purely because it's actually a pullback off a new low. Yeah, sorry, the 86.50. I thought you meant that. No worries, happens to the best of us. So yeah, look, you got in on this breakout trade. This is a structural failure to the upside. So nothing wrong with the entry. I don't know where your stop loss is. I would probably be looking at it around here, the 86.17. So it's probably about a 35 pips stop loss maybe. Yeah, no worries. So this is the key. The challenge for this market really, Chris, is to see continuation, because we've seen previously we could go really far back here. These are all rejections of making new highs. That's the major problem with this trade, you know, and that's quite a lot really. There's 2, 4, 6, 8. So if this market just reverses again today, then it doesn't really fill you with much confidence, but you might be able to capitalize on the breakout where the price closes, and then that gives more confidence to buyers to actually, you know, take this market to where it probably should go, and see a really nice strong pullback. And it is a pullback trade on a smaller time frame. No, it's a pullback on a bigger time frame. Sorry. So the overall trend is to the downside, as you can see. Certainly resistance up here at 87.19, so that would represent you know, a decent trade to the upside. It does have a decision to make. If it breaks this level, I'd be staying into that, because you'd get a nice big corrective move.
Market says upward wage pressure is very much a lower wage thing. We're not seeing it in jobs with wages $15 and up.
So there's your slow grinding price action. but from here we can certainly be targeting the 87.19, and then above it you'd probably want to stay in it and see if you get a really decent move to the upside.
Just under 3 minutes, still the Philadelphia Fed non-manufacturing survey for May, prior read of 21.5.
The other thing you have technically as well, if you have your stop loss back here at 86.17. Okay, so you actually got into this on the 15-minute. So look, you've got the right trade in the right direction. There's momentum pushing higher. You've got your stop loss below the daily high. It's a case of sticking with it and just managing the trade. Yes, there is probably a 30 odd pip stop loss to it, but once you get a corrective move, you know, what you would be expecting is if you ticked higher to pull back in and around this type of zone in here, and hopefully then you'll get the next leg to the upside, and then what you can do is you can move your stop loss up to you know, to that level, and at least take most of the risk off the trade. That's what we'd be looking to do on this side. So far so good. It's kicking higher. So it's just not giving us a great opportunity. There's a bit of a reversal in the dollar, bit of very mild dollar strength creeping in. The euro pound is just linear. It's just going dead straight. So we keep an eye out for that.
One minute.
So that euro yen trade. So we are now getting that move. You see this little rejection here. So we failed to close above. Okay, we're just marginally closing above. So let's see if this price
Another tweet here from Al Jazeera breaking. The Twitter account, Iran's chief negotiator in Vienna, says we have made significant progress in the talks, but important issues remain. Just repeat, that's coming from the Al Jazeera breaking Twitter account. Has been translated as well.
So as you can see, most of the strength is in the euro, so it's a trade worth sticking with, Chris, for sure.
Manufacturing. Regional business activity 36.9 up from 36.3.
Okay, so we're in the euro dollar to the upside.
The wage and benefit cost index 30.8 up from 26.2. Full-time employment 24 up from 7. New orders 16.5 up from 7.6. The headline number rises to 36.9 from 36.3. Business activity 22.1 up from 21.5.
So what we'll do is we'll get into the euro yen trade to the upside as well. Some more upside expected in this. It's quite a tight. It's really quite a tight stop loss.
Another comment from the Iran chief negotiator in Vienna, again via Al Jazeera. They're hoping to reach a final and decisive result during this round of talks.
See, there's a lack of volatility in the indices markets, and it's really, you know, a European strength day, really. There's limited opportunity everywhere else right now. So I mean, getting a pullback in the dollar, in the euro dollar, sorry, in the dollar pairs, perhaps is not a bad thing. It might give us an opportunity to get in at the euro yen at a slightly better price. Same with the euro pound. These markets are not crying out to be traded right now with the level of kind of volatility in these. So it might just be marginally better to wait for constructive pullbacks. So the euro pound, you know, get prices, but this needs to correct itself. A good 30 odd pips really. So look, we've edged our way into the euro dollar trade, so we look to stick with that. We're getting a bit of a rejection, and look at this on the 15-minute time frame. So we've seen the close above that 133.48, and we've failed to get the follow through. So it just allows us to be a little bit more patient and just give it a little bit more time. So anything else, Chris, from your trade? Look to stick with it. You're going to get a pullback, and manage the trade accordingly if you can. Okay, so look, we're going to just monitor a few of these trades for the afternoon. These markets do certainly feel a little bit wishy-washy now. A little bit of clarity earlier today. So we're getting a pullback. So what you're looking for is for that pullback to play itself out, and then start seeing if you get some strength and start making new highs. The dollar Swiss is just breaking these levels to the upside now. So in fact, this level here is just as important as this little zone. So this is a strong zone. This is a strong kind of zone of resistance. Multiple lows within that level, and now prices are pushing back to that level. So it's still, you know, a viable trade even in and around this sort of prices, if prices start look like they're going to turn around. Okay, so yeah, the dollar Swiss, yeah, absolutely, Chris. Look, it's do you mind me asking where your stop loss is?
Senior Chinese diplomat Wang Yi says China does stand ready to expand all-round cooperation with Europe on the basis of mutual respect and benefit. Says he sees China sees the EU as a partner and not a rival.
Yeah, I would still rather be bearish the dollar. So it's just experiencing a little bit of an uncomfortable pullback. 82.27. Again, I'm not too sure what that price is. The dollar Swiss this time, so do you mean the 90.27 maybe, or the 89? We're up at the 89.70 now, so just have a look at that stop loss there. Or is that your entry, maybe, the 82.27? I really do apologise. I need to terminate this this broadcast, but 87.01. I still don't understand that price, Chris. We're up at the 89.70 level. Looks like it's pulling back. Do you think it's still bearish? I do apologise. I don't know if it's me. I might. I've got my. You can't see the numbers. But what was your entry price, and what was the? You said you're in it already. I gather. It's just the the dollar Swiss is at the 89-cent level. Can I zoom in any further? No. I know it's not that easy to. Are you accessing your platform on your end as well? I assume, but we're up at the 89-cent level, so it's not 82 or 80 cent or 87. I'd still be looking to stick with it. Is the bottom line. So the momentum is very much to the downside, and you're looking to just continue that move. Okay, so 89.80 is your stop loss. 89.80. Yeah, so that's just above this little high in here. Yeah, so look, this is just the pullback off the low. So we never recommend traders to change stop losses, but this is more of a technical stop loss above the 90 level, just because you've got these double tops in there. I can probably see why you're going with that little level in here. So this is a pullback. Yeah, and you're just looking for that next leg to the downside. So it's just currently a pullback to the downside. That's all that represents. So look to stick with it. There's a lot of resistance in this little zone in here. We're looking for a selling opportunity. So stick with it. Absolutely, Chris. No problem. This is a strong level of resistance, and it might give us a slightly better selling opportunity pretty soon, actually. So so look, stick with that trade. It's just purely pulling back, and the trade idea, the trade setup, I'm not sure what your entry price is, but we'd expect further downside pressure. Certainly if the dollar continues to weaken, which we would anticipate that to be the case. So we're just getting a little bit of a pullback here in the euro dollar. So look, I do apologise. We need to shoot off. We'll be back again tomorrow at 12:30 UK time. So if you can join us for the training session, please do. Yeah, good luck with those, Chris. We'll keep an eye on them. We'll see how we get on. Yeah, that dollar Swiss trade and the euro pound. Good luck with those. Yeah, feel free to give us a thumbs up if you can, or subscribe to our website if possible. And you'll be notified when we go live, of course. And we've got, actually from next week onwards, we've got a number of, a lot of sort of content, little videos and stuff being posted out, so you might find those useful as well. So so we'll see you again tomorrow. For everyone here at Live Trade Room, take care and bye for now.